This is Wall Street Week. I'm David Weston, bringing you stories of capitalism. The Trump administration has stopped major funding for some university research and threatens more. We tell the tale of what that could mean for higher education and for the startup culture it supports. Plus, Argentina seemed to be heading in the right direction despite the pain. What does it need to achieve true economic health? And are the people willing to pay that price? And as President Trump paid a state visit to the UK, we look at London's dominant role in the country's economy and whether we just may be seeing some shifts in the balance. But we start with the big question for global Wall Street this week, as the Fed issued its long-awaited decision and summary of economic projections. Our special contributor, Larry Summers of Harvard, takes us through what we learned.
It wasn't far off what the market was expecting or I was expecting. I was glad to see Jay lean into all the uncertainties in the moment. The uncertainties about inflation, the uncertainties about future policy, the uncertainties about unemployment, the uncertainties about the political environment, about tariffs, and I thought that was broadly appropriate. My own guess is that policy is currently a little looser, looking at all financial conditions, than people view it as being, and that the current configuration, the balance of risks is a bit more tilted towards inflation rather than unemployment. So I think we're a bit on the loose side with respect to monetary policy and monetary policy signaling, but that's very much a difference of degree. And I was glad to see the emphasis on humility and on flexibility in the chairman's statement.
Chair Powell more than once talked about how unusual the situation is because there are really conflicting risks here. We've got both an inflation risk and an employment risk at the same time. How unusual is that? If you go back through history, is that a really strange situation to face?
Well, it's completely unprecedented for a member of the administration on leave to be a governor of the Fed. That's completely unprecedented. It's completely unprecedented for the president, on a basis that many people regard as protectual, to be trying to remove a member of the Fed. It's completely unusual for the Fed chair to be acting in a context where the president of the United States has called him a moron. On the question of the narrow sort of economic movements, this is what happens when you have a supply shock. When you have a supply shock, it pushes up prices and pushes down purchasing power. So you can make a case for going to the brake because of the increase in prices, or going to the accelerator because of the reduction in purchasing power. And I'd say the dilemma probably takes that form 20% of the time, perhaps. So it's not the norm, but it's also something that's not unprecedented.
Chair Powell said that when it comes to tariffs, which is part of the uncertainty, that the consensus of the Fed right now is that is a one-time price hit. He didn't use the word transitory, but he sort of came close to transitory. Is he right? Does he have reason to be confident that after an initial spike up, it'll come back down?
Well, I think it's important to distinguish two concepts of one shot or transitory. There's what we had in 2021 when, for example, the price of used cars spiked up, and the right assumption would be that the price of used cars would come back to the normal price level. That's not what is reasonable to expect with tariffs. With tariffs, you're getting a permanent increase in the price of the goods that are tariffed, but the question is whether that's going to be an ongoing rate of change or a one-off level of adjustment. Nobody thinks particularly that it's going to be a reversed change. So this is already more problematic than the kind of supply shock people saw in 2021. And the chair's clearly right that if you're just looking at, is the tariff going to get raised again and again and again, that's very unlikely. I think the question is, will this increase be processed through into an increase in inflation expectations, which will then feed through into higher wages and higher prices and set off a cycle. And that's hard to know, and I'm certainly not sure that it will be, and less of that happened after 2021 than would have been my guess, David. But we now have had a recent experience of substantial inflation. We now have a more politicized Fed. It's a process that's playing out over a long time period. So I'm not sure we'd want to be entirely confident of the idea that it will be one and done for the inflation impact of these tariffs. He may well turn out to be right, but this is an area where I would have a lot of humility and doubt, and I regard the biggest risk in this situation is being that we lose contact with our 2% inflation target and become a country with an inflation psychology.
There has been a fair amount of political pressure, as you say, in what the president said, what members of the administration have said, in the challenge to Lisa Cook, the appointment of Stephen Myron, as you say, who's still working for the White House, even if he's taken a leave of absence. Did Chair Powell on the Fed put some of that to rest in their conduct this week? That is to say, did it really make a difference in what they decided and what they said?
I don't think that anything different happened because Steve Myron was in that room. I don't think there was a different word in the communique. I don't think there was a different anything. If anything, it probably made it harder for there to be the kind of more dovish language that the president preferred. And I think the same thing is true with respect to the attack on Governor Cook. I think that if anything, that created a need to project vigor and rigor. I thought it was interesting that Governor Waller, who's clearly very eager to be the next chairman of the Fed, nonetheless went along with consensus view that there should be one cut rather than two, and I was gratified by that. And if the president knows his interest well, the president will have enhanced respect for Chris Waller because of this.
The Fed decision was big news this week, but it wasn't the only news affecting the financial community and companies. As we now hear from the administration, they would like to change the rules so that companies don't report quarterly. In fact, instead, they report semi-annually. Is that a good idea?
I think it's a bad idea whose time should never come. It's a bad idea because accountability and transparency have been the key to the success of America's capital markets, and quarterly earnings reports and frequent accountability and substantial sharing of information has been central to that. Whenever I hear a CEO saying they don't want to have to deal with quarterly earnings, I think of my students who don't want to have to deal with grades. And yes, sometimes they'd be more flexible to pursue their intellectual passions if they didn't have grades, but many more times they'd be free to drink beer if they didn't have grades. And I think it's the same kind of thing, frankly, with our business leaders. It seems to me that we have had the most extraordinarily successful capital markets in the world. Who could have thought 25 years ago, 30 years ago, when the Dow Jones average was only a small fraction of what the Nikkei average was, that 2/3 of all the market value of all the companies on earth would be American? That's a tribute to the economy, that's a tribute to those companies, but it's also a tribute to our market institutions and the way our capital markets work. That's why we have so much higher multiples on American firms. So to try to erode all of that, who are you trying to help? You're trying to help people who don't want to be accountable. Why are those the people who should be the objects of our affection? You're trying to help people who have special access to company information rather than the broader public. I always thought the idea of an honest, fair market was to try to reduce the advantage of insiders relative to outsiders. This goes in exactly the wrong direction.
Up next, the Trump administration is upending 80 years of funding for university research. What's at stake? Not just for the schools, but for the economy. This is a story about trees not growing to the sky, even if those trees are holding up an important part of the U.S. economy. President Trump has made no secret of his quest to cut funding to some of the nation's most prestigious universities.
We want money to go to all universities, not Harvard. They have $52 billion.
To date, much of the discussion has centered on the politics of it all, whether higher education has gotten too woke and whether it's done enough to combat anti-Semitism.
Anti-Semitism, pro-Hamas protests, an environment where students can't learn. Why should taxpayers, around the country be funding a private university?
As a physics and chemistry concentrator.
But the president's actions have put into question a massive, long-term partnership that has supported exceptional U.S. innovation over the years. A partnership between the government and higher education in the funding of basic scientific research.
We have had a terrific system of innovation in the United States.
Rafael Reif served as the 17th president of MIT after heading its Department of Electrical Engineering and Computer Science.
It actually goes back to 80 years ago. It started with a fellow named Vannevar Bush that created something called the Endless Frontier Act, which was really a social contract between the federal government and universities. The federal government funds research in universities, scientific research, advances knowledge, and we do it here, and at the same time as we do that, we educate the leaders of the future who bring that advanced knowledge to the marketplace. And that has been at the heart of a terrific ecosystem of innovation in this country that has lasted up to this day.
U.S. government funding for university research had its origins in efforts to win World War II and led to the development of new technologies such as radar and the atomic bomb. From an annual investment of $253 million during the Korean War in 1953, it exploded to some $60 billion as of 2023. But now it appears that this unique partnership may be up for grabs.
What we have had the last 80 years doesn't seem to be coming back. I think the changes that the government is making right now are going to be very hard for any future government, even if it's a very receptive to supporting science, to make it reversible. We have to understand that these changes are very severe, and we have to figure out a new financial model to continue advanced research in advancing science, which is at the heart of what we have been successful as a country.
Before we can figure out what comes next for funding of basic research, we need a firm understanding of what the existing system has brought us. Lily Lyman is a partner at venture capital firm _VC, which is, not coincidentally, based in Boston, along with dozens of colleges and universities and 350,000 college students.
The university enterprises are an important part of this ecosystem. Over a third of our portfolio comes from places like Harvard and MIT because of this talent density and the interesting research coming out of it. So for us, it's a really important part of our sourcing strategy, and it's an important contributor to the innovation economy here in Boston.
One of those benefiting from that innovation economy in Boston is Quilt Health, a digital startup backed by _ that seeks to put patients, clinicians, and researchers together to address complex medical conditions such as sickle cell disease. Its founder is Dr. Andy Elner, who comes out of Harvard's Brigham and Women's Hospital.
In my world, which is starting companies, really early stages of companies, what drives it is really its talent. People are always asking, who's the team? What's the idea they're working against? And can they build this almost impossible thing that they're interested in building? Can they solve this almost impossible problem that needs to be solved? And so, a place like Boston is just a hub for, really talented people, really ambitious people. And when we were looking to start Quilt, it's my second company, we made the decision, we wanted to start it here, we wanted to be based here. It's hard to start a company, it's hard to build a company. And any advantage you can have, you want to take. And I think just being part of this ecosystem, being in the flow of talent and ideas is really critical to solving the hardest problems.
The key ideas come from places that are thinking in novel ways. Clearly, without spectacular companies that know how to fine-tune those ideas and how to employ them, how to take advantage of them, how to make products and services out of them, we don't have the economy we have. So companies play a critical role in moving the best ideas and implementing them in products into the marketplace. But the basic ideas, most of those in the high-tech and the academic medical centers, they come from research and academia that is federally funded.
President Trump and his administration have challenged some of, I think, basic premises of that structure you describe of funding of basic research in universities. What is at stake if, in fact, they pull back from that funding over the longer term? Are we seeing disruption already?
It's a terrible outcome. If we stop paying attention to the funding of scientific research, the funding of basic science research, we really are burning our future. We are really killing our future.
Are we losing some benefits of scientific research already as labs suspend their activity?
Very much so. I mean, there is quite a bit of research that has been stopped. And research in academia, stop-start doesn't work. Once you stop something, once the laboratories close, once we lose the people, once we lay off people who have the experience and the expertise on the research we're doing, we lose a tremendous amount. Some of that has already happened. I tell you one thing, I think that even though we have lost quite a bit already, we still have an opportunity to just figure out how to fix the situation and not continue in the path we just got started. But I'm telling you, I honestly think that a couple of years of this, and this is irreversible. We're going to lose our advances, we're going to lose our future, we're going to lose our competition with China.
So despite, the headlines of what's been going on, the first half of 2025 was actually quite strong in the Boston startup ecosystem. We continued to see a lot of activities. We continue to see a lot of startup funding. But obviously the headlines and the pause in funding and research has been very disruptive. We've seen really important research, particularly in the world of healthcare and biotech, get paused. There have been job cuts, and there's just been a general environment of volatility the last couple months. From an underscore perspective, our deal flow has remained consistent. We continue to see these exceptional teams coming out of this ecosystem, and the entrepreneurial spirit and the capabilities and technological unlocks are still quite strong. What will be important, though, is, in any innovation economy, you have multiple pieces to it. There's a talent piece to it, there's a research piece to it, there's a funding piece to it. And obviously the federal funding is an important component to the research dimension. So what we will need to do is find alternative sources of funding.
What are those alternative sources of funding, and have they started to kick in yet? Lyman says there's some reason for optimism.
We are seeing that. There's venture capital firms like ourselves, particularly at the early stages, but we also see some of the larger private sector companies in the life sciences space, in healthcare, in insurance that can pour funding into this. And then there's also later stage funding. I think a good example is if you look at Commonwealth Fusion, which is an MIT company. They just raised over $800 million from Google. That was announced in the last couple of weeks. That's critical for them to continue their innovation to bring clean energy to this nation. So there is alternative sources of capital. We're starting to see it flow in. Again, it will follow innovation and big opportunities, and we hope to see more of that continue.
Although firms could fill some of the void left by the federal government, Professor Reif warns that private companies cannot be counted on to pick up the full $60 billion tab being paid by the U.S. for research, particularly the type of basic research that universities specialize in.
There is, of course, research done in corporations, in companies, but most of that research in companies is done on a roadmap of products. The company is thinking that in 5 years from now or 10 years from now, I need to have this product ready. So the research is being done focused on getting that product ready. Federally funded research in universities is actually to advance knowledge. It's not for a particular for-profit purpose, it's just to advance knowledge. And out of doing that, many of the ideas that eventually industry uses to fine-tune their products is coming from university research. So we have benefited in the last 80 years from this terrific system, and not having access to that or stopping access to that is going to basically kill the source of ideas that will power the economy for the next 80 years.
Cutting back on the basic research that's powered the American economy since World War II would be a problem at any time. But it's particularly an issue now when the U.S. has a strong economic competitor in its rival, China.
The presence of China is critical here because we have had, as I mentioned, the best system of innovation in the world with our knowledge economy. However, we did not have a competitor like China before. We were the only kid on the road just doing all this stuff. China comes along, they have a different model of innovation than America. We have a market-oriented model. China does not use a market-oriented model. They use a technology domination model. They have to focus on dominating a particular technology. They have an all-of-government effort to dominate it, and they get there. In most of the areas they want to dominate, they have actually done that, whether it's solar panels or EVs or whatever, they get there. That model has some advantages that we don't have, just like we have some advantages that China doesn't have. These are two different models competing with each other. What we need to do is recognize our strengths and double down on those strengths, while at the same time recognizing our weaknesses and fixing them. China is doing exactly that.
Given the size of the problem and how much is at stake, where do we go next? Professor Reif says we can't wait around for a solution.
So I see a long-term track, which is figure out a new model, but I think we need a short-term emergency fund to make sure that as much of the fraction of funding cuts the government is doing in science research, we can just bring that back. And I think it's critical that state governments play a role on this. It's critical that state governments bring the private sector in to figure out how to add funds to this emergency fund. It's critical to universities to contribute. So I think there should be a plan right now that's particularly states like Massachusetts, like Washington State, states that have significant knowledge economy. They have to start working on how to figure out to have an emergency fund for a couple of years, 2-3 years, while we figure out the long-term plan.
There is a journey, and it's from the cutting edge research where it's still a little bit gray, then you figure it out, but there's still an element where you have to figure out a viable commercial model, and that can take a really long time. There is a lot of venture capital here in the United States. We have the biggest venture capital ecosystem in the world, but we need to make sure that that capital is creating structures and mechanisms for that messy middle before it's obviously commercially viable and scalable. And sometimes that's venture, but sometimes it is university, sometimes it's philanthropic, and sometimes it's private sector, but we want to make sure that that is all sort of US-based or US-driven capital in order to get it through that entire sort of process of development. And you can't sort of cut out pieces of it or else it'll break the whole system.
Short-term or long-term, ours is an ecosystem of innovation that's been growing for some 80 years. An ecosystem like a forest, in which some trimming may need to be done from time to time, but in which we also need to exercise caution before cutting down those big trees reaching toward the sky, lest we put the entire system at risk. Coming up, President Milei of Argentina hits a bump in the road to his economic revolution. We'll look at whether his plan has been working and what is next. This is a story about short-term pain for long-term gain. Argentine President Javier Milei's strong medicine for his economy seems to be working, despite the costs. But recent elections raise doubts about whether the public is willing to stay on a difficult course.
Over the weekend, President Javier Milei was defeated in a key provincial election.
Yo no quiero un fin precipitado ni estoy en contra de la democracia, pero sí una reacción. Si el gobierno no entiende que este no es el modo de manejar, bueno, él sabrá qué rumbo tomar.
Milei's party lost big in the Buenos Aires provincial election, and markets reacted immediately. The peso weakened against other currencies, and stocks tumbled as the country's political and economic future was thrown into doubt.
The Argentina dollar bonds plunging the most in 3 years. That's after a provincial election is now threatening to undermine President Javier Milei's national economic agenda.
By some measures, President Milei has pulled off a near economic miracle bringing Argentina's inflation rate down from almost 300% year over year in 2024 to just over 30% today. But he got there by imposing austerity measures that hit the country's citizens. David Kim is CEO of Argentina-based textile company Amsud.
The history of Argentina, there was always political problems during election times, and this time is no different. Our employees are very concerned, some are frightened, because the last 2 years we had to lay off 100 employees from 450. We are now 350. It was very difficult.
The problem that you have with the kind of reforms Milei's been putting in place is putting a lot of economic pressure on anybody from the middle class down.
Hans Humes has been investing in Argentina since the 1980s and is Chief Investment Officer of Greylock Capital Management.
A lot of these austerity measures that were imposed, in particular, were hitting the kind of voters that Milei was able to grab to win the election in the first place. And that's the tricky part of it. They were willing to take that pain, but now they want to see something come together for them.
This latest round of turmoil is part of a much longer story, one that Juan Pablo Nicolini has studied over the years. A former economics professor in Buenos Aires, Nicolini is now an economist with the Minneapolis Federal Reserve, though he made it clear that the opinions he shared with us are his own and are not the opinions of the Fed.
The Argentinian society has an addiction to government spending that ends up generating fiscal deficits. That is, the government typically has spent in every single year in the last 60, except for a few short periods, more than the tax revenues it collected. As you can imagine, for even a person, a family, a company, if you always spend more than what you make, that leads you to trouble. And that was basically the nickname of Argentina for the last decades, trouble, economic trouble. And we are now in the process of reverting that. And the question now is going to be whether that's going to be sustained for the next 3-4 administrations, which is what Argentina needs to recover from the addiction.
How did President Milei reduce the deficit?
The whole approach was to reduce government spending that was, for the level of income that per capita that Argentina has, was certainly too high, and that had been increasing substantially in the last 2 decades. And that's where he attacked the problem. The first month of his administration, he managed to achieve a fiscal surplus. Because he did that, then they could also take measures to lower inflation. At the time he was elected, inflation was running about maybe between 5 and 6% per month. And now it's running at about between 1.5% and 2% per month. So it's still very high, but clearly reverted the trend of inflation going up.
The biggest problem is that the costs increased significantly. Even though the inflation has gone down, energy costs have rose about 70-80% in 1 year, and we weren't able to pass those increases onto our selling prices. So we've been selling under our cost. I hope there is a change here.
So inflation has come down. That means prices are more stable than they were before. What has been the effect of unemployment?
The unemployment increased a little bit, and actually that is a pretty good question, because we are used to think in very stable economies that typically when you have policies that reduce inflation, one tends to think that kind of slows down the economy, and then that increases unemployment. But when you're running at the inflation rate levels that Argentina was running, which is about over 200% per year, then when you reduce inflation to, let's say, about only 20 or 30% per year, then you do not necessarily affect economic growth. Or to put it differently, you actually improve economic growth.
So how did we get here? Most economists agree that the long shadow of Juan Perón, the longtime leader of the 40s and 50s, continues to plague the Argentine economy. His populist policies of government borrowing to address poverty and inequality helped the masses for a time, but by the 1960s, they affected inflation, growth, and, above all, the size of the fiscal deficit. something that President Milei sought to address with his vigorous economic agenda when he came to office less than 2 years ago. Argentina, over time, has built up a lot of deficit, but there have been a couple of periods where they did more or less get the fiscal deficits under control. Talk to us about those two periods.
So the first one was during the 90s. It was after a massive hyperinflation. It followed, for instance, one of the worst months was June in 1989, in which inflation rate was 200%. Prices were 3 times what they were at the end of the month than what they were at the beginning of the month. And that really was a big shock for society. And then that's when a government came that proposed a different path, and it fulfilled it. It had a much more responsible fiscal policy. Didn't completely eliminate the deficit, but they were much, much, much lower. And then Argentina had a huge crisis in 2001 and 2002, in which the government couldn't pay the debt. There was a default. Poverty rates went to over 50%. Unemployment went to about 25%, pretty much like what it was the Great Depression in the US. And then following that, we also had a period of 5-6 years with fiscal discipline, and then in which, again, inflation was, we had 2 or 3 years with inflation of only 1 digit, that means like 8%, which again, for Argentina is an amazing success. But then the fiscal deficit started showing up after the financial crisis, and they started going up again, and we went into the same old mistakes of the past.
Let's not pretend that we're back in the glory years of Peronism, where there was enough of a surplus that you could effectively subsidize a big part of the population. Focus on businesses, focus on value-add manufacturing, focus on education. I mean, there's a real misallocation of resources that's happened, human resources that's happened over years in Argentina because of some of the distortions in the foreign exchange markets. You have some of the best business minds playing games with the official rate versus the external rate. That doesn't add a lot of value to the economy. If you go back to the passé leftist rhetoric, that'll be a short-term solution as well.
Argentina is certainly not the only Latin American country that's had its problems with debt, but others have figured out ways to come back from the brink.
The problems that plagued Argentinian economy in the last 3 decades were basically plaguing the region, the Latin American region, in the 70s and the 80s. Countries like Chile, Mexico, Peru, Uruguay, they were also running very large deficits, and all of them had a very large and recurrent macroeconomic crisis. But most of those countries learned the lesson, and they have been doing much, much, much better than Argentina. The message is something that you learn in primary school, which is that you cannot buy candy at school if you don't bring your own money. Or you could, because if you have a friend that can lend you the money, then you might have candy today. But then you have to come back tomorrow with extra money to buy your candy and pay your debt back. It's very painful for us, but it's a great example for the rest of the world.
Some investors over time have seen a pattern to the Argentine economic reforms and have taken them into account in their investment decisions.
This time, we're lucky enough to sort of understand that 3 years is generally when Argentine presidents start having problems. So we were able to lighten up quite a bit, and we're actually buying across the board. Markets on the debt side may have only moved 10-15%, but that's still some pretty good returns on the yield basis. I mean, you've got 12 to 15% yields. My assessment is that the lessons have been learned well enough that they can manage it, and we won't go back to any of those really bad times. So we'll see.
Lay out the best case for long-term investment from outside into Argentina right now.
Wow. It would be good to see follow-through on a lot of these reform efforts. I'm curious to see what changes Milei might make in his cabinet.
Investment has been good, but not spectacular. There were a lot of restrictions on financial markets and in foreign exchange markets when the government started. They've been removing some of those restrictions, but not fully yet. Like there are restrictions on international companies to take the profits out of the country. So investment has not been booming as one would expect with the stabilization, because there are still some of those restrictions in place.
Many years ago, an Argentine finance minister gave a speech about the painful steps needed to put the country's economic house in order. He concluded that the measures in progress allow us to launch a new formula today. We must get through the winter. Now, 66 years after that address, Argentina finds itself needing to get through another winter. The question is whether the country's people are willing to suffer short-term pain that President Milei says is necessary in order to find long-term gain in a more sustainable fiscal approach. That hangs in the balance.
They say we are crazy to stay here, but we are used to this, and we will be here working in the textile business for many, many years. I think the business owners in Argentina deserve a medal because it's a very challenging country.
I think the entire country understands what has held them back for decades now, and they're willing to take a certain amount of personal pain. Now we have to see how this transition goes and what the new messaging will come. If Peronism is able to prevail in October, what's the messaging that they bring along with it? If it's a return to the same old, I think they'll have lost a huge opportunity.
Up next, as President Trump pays a visit to the King of England, we take a look at the economy of the United Kingdom and whether it could ever be determined by more than just what happens in London. This is a story about putting all of your eggs in one basket and what it can take to move some of them into other baskets. President Trump paid a state visit to England this week, and as usual, the focus was on London, which historically has dominated the British story, economically and otherwise. But our colleague Lizzie Burden tells us about how that just may be beginning to change.
If you talk to anyone long enough about the UK, two things usually come up: football and London. When Tom Wagner was looking for an investment opportunity, he wanted both. In the end, he got one.
It's an interesting story because our adventures in English football actually began with us looking at a London-based Premier League club. It was a great opportunity, and shortly after passing on the opportunity in London, the opportunity to invest in Birmingham City was presented to us, and it proved to be too compelling for a variety of reasons.
So it's more about the football than Birmingham?
The football is what drew us to the opportunity, but what sold us on the opportunity was the city of Birmingham.
So Wagner, the co-founder of New York-based Knighthead Capital Management, went all in, partnering with NFL great Tom Brady to buy Birmingham City Football Club and invest £3 billion to turn his derelict plot of land just 15 minutes outside the city's downtown into a project featuring a new stadium, commercial office space and transport links.
2 weeks ago, that bridge wasn't there.
Jeremy Beale is the club's CEO. He showed us around their new site.
We're planning on having a 125-acre site. And what you can see around us is you can see a new bridge which has been built, which is what will carry HS2 into the city. HS2, we always say, makes Birmingham London Zone 5. It makes us accessible from the capital within 47 minutes. And you can see the city skyline. Over to my right is where the stadium for Birmingham City Football Club will be built, up on a hill, towering over the city skyline. And we're really excited about that ambition.
The investment is welcome news for the region. But why Birmingham?
It's oft forgotten as being England's second city. It sits right between the two most talked about cities in the UK, with London and Manchester. It is a really, really interesting city in the sense that it's going through a transition from an industrial base to one that is transitioning to a modern economy. And it's filled with a highly diverse, very young, very educated, very dynamic population. And when you look at that set of circumstances, it makes for an interesting place to commit capital, an interesting place to pursue a very large and ambitious project.
That's music to the ears of a Labour government which is struggling to spur growth that's been sluggish since the great financial crisis,
Labour MPs are going on the record saying
and which has the opposition leader fearing that the UK may need an IMF bailout, a repeat of 1976.
I'm going to negotiate with the IMF on the basis of our existing policies, not changes in policies. And I need your support to do it. It means sticking to the very painful cuts in public expenditure on which the government's already decided.
Data from the Productivity Institute, a Manchester-based research firm, found that the UK does not function as an optimal currency area. A deficiency which means that the benefits of the country's monetary policy are almost entirely concentrated on London's economy.
The key there is that
Diane Coyle is Professor of Public Policy at the University of Cambridge and a former advisor to the UK Treasury.
The UK is one of the most regionally unequal economies in the developed world. We're right at one extreme, which is probably not a good place to be. And the problem about that is that if you want to raise economic growth nationally and improve people's living standards around the whole country, that growth is not going to all come from London or from places like Cambridge, where I'm sitting now. You know, obviously it's fantastic that we've got these extremely high-value, rapidly growing cities in the southeast of the country, but that needs to happen in other parts of the country as well. And I think there are actually some quite optimistic signs about that. If you think about Manchester or Birmingham, their performance has improved recently. And that's something that I would link to the devolution journey that the country has been on. One of the things holding back those other cities has been just an inability to make decisions for themselves on the basis of the area that they know well, the local needs that they know, the things that they can tell investors about what makes them attractive places to put money. In a sense, it's been a very long journey. The UK is very centralised. A lot of economic decisions for the whole country are taken in the Treasury. The Treasury can't possibly know what's going on around the whole of the UK. So there's a loss of information about local needs and local opportunities in doing it that way. And so many people in many cities, and Manchester's the one I know best, have been working for decades actually on persuading central government that more decisions need to be taken locally and that local knowledge needs to be exploited better. So it began post-financial crisis, really, with the devolution deal that's happened first for Manchester, subsequently for other cities around the country. And I think it's paying dividends because in the past decade or so, the whole Greater Manchester area has been one of the fastest growing areas of the country. So I think we're starting to see a demonstration of the case for becoming less centralised, allowing local authorities to build on the information they have, the know-how that they have about their local economy, and the ability to coordinate better among local actors. Because if you're an overseas investor wanting to put money in the UK potentially, one of the challenges is all of the different agencies and people that you need to speak to. It's much easier to coordinate that at the level of an individual city than it is to have a single front door in central government where they don't have all the information they need.
The improvements are beginning to show in the data. In the Office for National Statistics' latest figures, London recorded annual real GDP growth of 0.2% in 2023. The North East was at 1.7%. And the West Midlands 1.1%. Jason Wurer is the CEO of Lioncroft Wholesale in Birmingham.
Well, the landscape in the Midlands and Birmingham has changed a huge amount over the last 50-odd years that we've been in business. Lioncroft has seen a massive growth in the independent retail sector that we deal with, the mom-and-pop stores, as you might know them. And the demand has been driven by the demographic in Birmingham, the growth of different communities coming in. Brexit in its early stages back in 2020 was challenging. We found that in the short term for business, for importation, for exports, it became very difficult to trade. And the labour market became very tight, so it got a bit difficult for about a year or two. And also concurrently there was the COVID virus, the pandemic happening, so that had a double effect on us. However, the medium-term and the long-term picture seems a lot more positive. So if we look at our region and we look at our country today, we're free to do trade investments and trade deals with various countries around the world. And it just feels that there's a real energy to this place right now. And it's just amazing to see. I've lived and worked in Birmingham all my life, and I think the energy of this region and of this city today is far stronger, far greater than ever before.
That's the energy Tom Wagner's looking to capitalise on and turn into a profitable investment.
If for Birmingham, the city, I think the growth potential is extraordinary because we can help spur investment into a city that's in need of housing, that's in need of more office space, that I think could use to keep more of the talent that is educated there in the city of Birmingham by making it a more compelling place to live. And then providing for a venue of work and entertainment for the whole of the Cotswolds, the whole of the West Midlands, as an example. Those are places that are very dynamic and experiencing lots of inbound investment that will see a greater amount of connectivity into Birmingham, the city. And as it relates to Birmingham City Football Club, the opportunity for us is to grow the brand and to grow the club into something that I think is more commensurate with the underlying fan base that existed when we bought the club. It had always been a big club that had never really seen or achieved its full potential.
And likewise, London, which contributes around 23% of the country's GDP, far more than any other region, will always be the UK's star player. But for it to reach its full potential, it needs more from the whole team.
London is going to be the dominant city, it always has been, and we want London to continue growing as well. But the whole economy will be healthier if other cities are growing in the same way. At the moment, there's a lot of transfer through the tax system from London to the rest of the country. That could change if other cities start to generate more tax revenues themselves through their own ability to grow. So having a much more balanced economy regionally is good for everybody. There's often an idea that this is a zero-sum game, that if Manchester and Birmingham are growing, London is somehow going to harm London. That's complete nonsense. The more other cities grow, the better it is for London as well. I am optimistic if the politics aligns, and it is a political decision about how we want to organise the governance of the country and how much devolution we want. One of the things that tends to hold it back is this concern about the capability of officials in other parts of the country to deliver the kinds of policies that we have centralised for so long. That's not going to change unless we start to do it, and there are definitely ways to address that. If we don't try it, if that political decision isn't made, then we're going to be stuck as a slow growth country and the laggard in the OECD area. But there's a great opportunity there, and if the Chancellor and her successors care about growth and care about living standards, they're going to have to grab that opportunity.
Next, Leon Botstein on the broader implications of the Trump administration's changes in university funding. President Trump's efforts to redefine federal relations with higher education have major implications for how the U.S. funds research and for the startup companies that have resulted. But from his 50 years as president of BARD, Leon Botstein brings a broader perspective to what he believes is at stake for the country.
The pattern, which has been that the university and the government have collaborated on research agendas, but it has a long history dating back to the Manhattan Project, to the making of the atomic bomb. The making of the atomic bomb was the decisive historic event. America could not have done it without the universities, and the universities could not have done it without the government. And since then, America has been the premier place for higher education. You have a collaboration which has worked wonderfully for reasons that I do not understand. The Trump administration has decided to break this up, to unravel this. The claim is that the universities are woke. Well, universities have always had majority opinions. You know, the universities were in the forefront of the America First movement, which opposed America's entrance in World War II. Every generation has had its political incarnation on the university. But the point is that this claim of wokeness is wildly exaggerated, and furthermore, there is the illusion that the real problem here is the failure to protect the Jewish students and Jewish staff and faculty. I'm a Jew, an active member of the Jewish community, and I think this is also wildly exaggerated. And anti-Semitism has been part of American culture. It's been part of university culture. However, the university has been the most open and responsive to the aspirations of the Jewish community. The idea that the university is anti-Semitic is ironic and not actually true. So, for reasons that are political, there is a destructive intent to demolish what has been for decades America's signal competitive edge throughout the world.
Are the challenges you identify right now across the board, or are they more targeted on what I would call the elite institutions?
Well, they're not at the elite institutions. They are at the Research One universities. So you're right. America has a kind of patchwork quilt of many different kinds of institutions, much more varied than other developed societies in the West particularly. And so you have public research universities as well as private research universities. Then you have smaller universities that aren't quite as research heavy. And then you have purely undergraduate institutions. Then you have community colleges. So you have a really wide variety of institutions that serve different constituencies. There's one thing that these institutions all have in common. America suffers from an antiquated financing scheme for its universities. Our great public university system was really created during the presidency of Lincoln with the Morrill Act and the creation of the great state universities. After all, the majority of Americans go to public institutions, not private institutions. We always talk about Harvard, Yale, Princeton, but they're not the real place where Americans get educated. They get educated in public institutions, many of which are terrific. And the state universities in the Midwest and in the South and the West are first-class places. I don't know why both the public and the news media, and now the White House, has an obsession with these marginal, in a way, statistically, institutions. The whole issue about admissions and discrimination applies to a handful of institutions. Most of us are in the business of recruiting students, of welcoming students to us, not selecting, not making a cut. We're not a sort of a World Series baseball team. There are a couple of teams that are in that kind of world, but most institutions are not. And the best of our students in this country don't necessarily go to these elite institutions. There's a myth that somehow your career will be better if you go to one of these institutions. That isn't the case. It is an odd situation in which there is an unnatural focus on a very small portion of institutions. However, they reflect a problem that affects all research universities. The cutting of overhead, the dismantling of everything from USAID to cutting the funding for medical research, and generally the cutting of funds to bring graduate students and postdocs. America has been a net importer. It also ties in with this anti-immigrant policy, which is completely ridiculous. Factually, without the great immigration from Europe in the 1930s and 1940s, America would not have emerged after the Second World War as the leader in the world in higher education. We owe our greatness to the migration of scholars and scientists and engineers who came to this country fleeing oppression. Now we are flirting with autocracy, the very thing that great scientists and scholars fled. It's a reversal of roles. It's a problem that involves every institution because it is fundamentally about censorship and freedom. What the government is doing is using money, which as a weapon. You know, scientific research, learning, universities, libraries can't exist without support. It's impossible. You know, we think of Harvard as a very rich university, the richest. So it has some endowment that's larger than 50 billion. But you and I can name several individuals who've earned a wealth level more than 50 billion in less than 20 years. And that university has been around since 1636. Who says it's rich? Now, they're responsible for their own arrogance of saying they're rich. They're not rich. They can't survive as a research university without the collaboration of the government. They may be a private institution, but they're dependent on the government. Then you take a public university, which isn't always public. Berkeley is very, very dependent on private support. So is the University of Michigan. But they're state institutions, and the state built their facilities by and large. So they too are very dependent on the public. So that financial relationship has always come with a respect for their freedom and independence. What do they do their research on? What kind of problems? Now, certainly the government is interested in practical results, whether it's vaccines, new technology, faster computing, chips, all that, all the things we talk about in the modern world, AI, it's all university dependent. Without the world of the university, we wouldn't be where we are now. Why a president and a government wants to destroy that is absolutely unclear to me, especially under the slogan of making America great again. If America was and is great, one of the sources of its greatness is its university system, its knowledge production, and the connection to the economy.
That does it for us here at Wall Street Week. I'm David Weston. See you next week for more stories of capitalism.